Many banks could be collapsing right now, but the government has ordered to keep it secret. So we could literally be in the middle of a systemic banking collapse and we wouldn't know about it. However, we will find out on Thursday. We are probably fine, but pay attention to this. Fed to publish new emergency loan totals this week without naming names. Borrowing from the Federal Reserve's emergency bank facility will be disclosed weekly in the Fed's regular balance sheet update, but individual borrowers won't be named for 2 years. However, usage of the Bank Term Funding Program will appear in the Fed's H4.1 statement of factors affecting reserve balances published every Thursday at 4:30 p.m. in Washington. Yesterday, trading was halted for 22 banks, but none of these banks collapsed. And we might not know for 2 whole years which banks are actually in grave danger, and only this Thursday will we know if overall the system is going to be all right. One way to know if we are experiencing a bank run overall is to look at Bitcoin. And we really started experiencing a bank run on Thursday, which was March 9th. But as you can see, Bitcoin price actually dropped. We should expect to see the opposite, which then later Bitcoin absolutely skyrocketed as these bank runs really started. But it appears that there was quite a bit of a delay because it does take quite a bit of time to actually transfer the money out and buy Bitcoin. Another obvious way to measure the health of the banking system is just to look at ETFs that have regional banks in them. And today, it looks like things are all right. But if suddenly you see a drop, that is a moment to really be worried. Graham Stephan, who I like, although he's not really bullish on Tesla stock anymore, he says Silicon Valley Bank crashed because it had to sell its assets at a loss to meet withdrawals. Other banks don't need to do this. They can now pledge assets and take loans through the government's BTFP program. Don't panic. Now, whenever I see someone saying, do not panic, that is my alarm bell going off saying, what is going on? It looks like I actually need to be very concerned. And so I looked into this whole thing, and yes, actually we should be really concerned. Here's why. Graham would be absolutely right if the BTFP program had unlimited funding, but it is very limited. It only has $25 billion, and most of it perhaps is already used on the Silicon Valley Bank and the Signature Bank. And here is the really scary part. Silicon Valley Bank collapsed because $42 billion were withdrawn in one single day. Not just $25 billion, 42. Now, do you think we should not be worried at all anymore? I think we will be fine, but I am still on guard. I think it's not likely that we will have some sort of big, complete collapse of the whole thing. I don't think that's likely, but there's no clear, guaranteed pledge that the government will use unlimited funding to fund this. I mean, reading what the government is saying here, it seems like they are indicating that the funding perhaps is going to be unlimited, and they are certainly committed to protecting all deposits, whether FDIC insured or not. But it specifies the $25 billion right here, and then it says the Federal Reserve does not anticipate that it will be necessary to draw on these backstop funds. This is good, but also very scary. It is good because they are not anticipating that this is a bad situation. Also, they have to say that because if they do not, that will spread panic. So they sort of have to say it. But if they actually mean it, and if they are not just saying that just to calm everyone down, not because they think that they will not have to draw on these funds, then that means they are not prepared to fund this program beyond the $25 billion that are pledged to this program. This whole crisis started because of unrealized gains. And currently we have $690 billion of unrealized gains throughout the whole banking system. And that government program is only designed to absorb 25 billion, and probably they already spent a lot of it. And what the government is doing with this BTFP program is basically it takes the assets from the bank, and let's say these assets will one day be worth $100, but the market price is only $40 a day. The government will give $100 to the bank. Bonds lost value because interest rates went up, and you have to hold these to maturity to get the amount that it says it is going to pay you. But now it is worth less, and this is a good oversimplification of that, but I think I have a better explanation. Imagine you have a house. You go on vacation, you come back, turns out you have skunks living in your house. And the skunks, they had a fight with, I don't know who or what, but what skunks do is they smell up the whole place when they sense danger. And the place stinks. Do you think you will be able to sell that house for a good price? Or do you think the market is going to tell you, until the stinky smell goes away, you're not getting paid the market price? And one of the people that I know, he was driving and he hit a skunk. I don't know how exactly he hit the skunk, but the whole car stunk for about 1 year. And he told me, for that 1 year, I was single. So the government is basically buying these stinky assets at prices that no one would actually pay today. And because it's the government, basically, they are calling it not a bailout. Now, all of the shareholders and all of the bond holders that lend money to these institutions, to these banks, they all are going to lose money, but all of the depositors will be given their money back. So call it a bailout, don't call it a bailout, but the fact is the government is paying for some stinky assets here, and they are not paying the market price. They are overpaying. I'm not saying good or bad, I'm just saying that's what's happening. And remember, we have well over $500 billion in unrealized gains, but the BTFP program only has $25 billion in funding. But this investment manager, Lawrence Leopard, says the Fed just opened swap lines on the entire U.S. banking deposit base of $17.6 trillion. The Fed balance sheet is $8.4 trillion. And the big question here is, who eats these losses from unrealized losses? Because if you are only giving a 1-year loan, basically, let's say, if interest rates keep going up, these unrealized losses will only get bigger. So does this really solve the problem? Or is the government just going to absorb all of these losses? I mean, they are not explicitly saying they will. They have $25 billion that they pledged that they can use for that. If you assume that the government will just eat all of these losses because the Fed has a huge balance sheet, okay, no problem. Nothing to worry about at all. But what if they don't? And what if these losses are well over 25 billion and they choose not to expand this BTFP program? What will happen then? We don't really know. And here's another problem. Even though the Fed is backstopping these deposits by helping to alleviate the unrealized gains, they are not really giving you par value for these assets that have losses. Reuters says under the Bank Term Funding Program aimed at shoring up liquidity in the sector, the Fed will provide banks with 1-year loans at the rate of 1-year overnight index swap plus 10 basis points. So whatever you are borrowing, you are paying 5%. And if you are already not looking good because you mismanaged your bank, paying 5% interest on the assets that you supposedly had, that still costs you money. And these are 1-year loans. So 1 year from now, you have to give this money back. What if interest rates go up even more by then? Most likely, the government would just extend these loans and would change the terms, make it easier. But still, you can't deny that we have a lot of institutions with unrealized losses. These unrealized losses will get even bigger, and these banks will need not just 1-year loans, but 2-year loans, 3-year loans, 4-year loans, and maybe even 5-year loans. And on top of that, they still have to pay this interest. Most likely, the Fed would step in again, so I think we are fine. But I'm still on guard. I think there is still a possibility, not the big one, but still a small possibility that things can go horribly wrong at any moment here. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.